All right, folks, the big tech names have reported, and let's just say for now the market has spoken, but I don't think we know the real story until we get to speak with my next guest. Joining me now, IO Fund lead tech analyst Beth Kindig. And Beth, I was reading where you were saying, okay, Amazon and Google, they were big winners. Although, I got to tell you, I'm looking through the Amazon report, and I feel like it was more about very low expectations. What was so spectacular about their numbers?
There was low expectations. You're absolutely correct around cloud, and cloud is still decelerating. Where Amazon did come in strong is the margins. And as you know, we've had a historic tech rally in the first 6 months of this year. The NASDAQ has outperformed any other year in its history since it was founded in the late 70s. So the reason is that big tech was able to pull so many levers and show its strength on the margins, and Amazon finally caught up to its peers in this last report. It's been really dragging on its margins. It finally came back to its historic margin of 5 to 6%, especially on that bottom line. It was important and critical for Amazon to communicate that it could do what its big tech peers have been doing this year.
Yeah, I think for Jassy, it was a make or break moment. So here's an interesting thing. So the 3 quarters going into last week, Amazon stock got hammered when they reported. Conversely, Apple's shares went through the roof when they reported, but it was the exact opposite. And this is what I don't get. Those service numbers look phenomenal to me. Those margins that they get on the service business, the rate of growth on service. How come the street doesn't seem impressed? The stock's been under a lot of pressure.
Those are great questions. Getting a lot of questions about Apple services was, as you pointed out, phenomenal. I think where the market is nervous is that across the board, we keep hearing the consumer is weak. These are from other companies, bellwethers, such as Taiwan Semiconductor, Broadcom in their last report. On Semi said automotive is very strong, consumer is weak. AMD, of course, consumer is weak. Microsoft saying consumer is weak. So we keep hearing consumer is weak. And what do we have? A very consumer exposed company with Apple, iPhone miss. You have the perfect ingredients for the market to get a touch nervous.
Let me ask you about some other names that aren't well-known names. You had actually put out a list of 10 tech stocks with gross margins above 75%, double-digit growth, double-digit profit margins. A lot of them reported, and I got to tell you, I was stopped out of Rambus. I got crushed. I'm glad I wasn't in Fortinet, which lost 25% on Friday alone. How do these companies have this magnificent growth and just get waylaid like this? I think this is one of the things that makes people nervous about investing in tech.
It can really make people nervous. And I think the missing piece is that when the CPI number kept coming in, lower and lower, the market moved into a growth quadrant. So the top line has to beat. So these companies are strong on the bottom line, strong margins, but they missed on their top line, or management basically said deals are getting pushed further out. There's nothing worse in tech than those words, deals getting pushed further out.
All right. I got to ask you about a name, and I got to tell you. So on June 7th, on this show, I featured Super Microcomputer. I've been watching the videos. I know they're good friends with NVIDIA, the CEO. It was $239 then. It's $352 now. You've been pounding the table on this. But you still think this could be a sleep, that this still has more upside potential?
Yes, and this is what I love about your show, is that you always ask about the gems. You're very, very good about that, and I love the opportunity to talk about them. The thing that's really unique about Supermicro is that it was valued as a commoditized hardware play. This is like your Dell, your HP. This is one forward price to sales, very, very low valuations, very commoditized valuations. But once it started offering liquid cooling to AI servers, Supermicro began to move into a new valuation, more AI-related. Our AI valuations, modestly speaking, AMD, Marvell, those companies are a 6. So when you move from a 1 forward price of sales to a 6, you have massive gains in returns. We're about halfway in between. Supermicro right now is trading at a 3. So we'll see if it catches up to the other AI-related stocks now that the product is more AI-related.
Golly, I remember that stock. I mean, really, I think I might have somewhere in the past traded it as a single-digit stock. Amazing. Beth, you're fantastic. Always appreciate these conversations. Congratulations. You're killing it. Appreciate it.